Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. I just wanted to give you a quick update on the Bitcoin hash rate, what's going on with the hash ribbons indicator, and also the Bitcoin pool distribution. So if you have been watching the channel, in the past couple of weeks or so, we've been focusing a lot on what's been going on with these miner capitulations, and quite recently, one of the largest Bitcoin miners known as Core Scientific was capitulated after they went insolvent. So we mentioned this was the largest Bitcoin miner to become insolvent, and since this happened, hash rate absolutely plummeted through the floorboards. I know we've talked about this recently, so I won't focus too much on the hash rate in of itself, but since this last update, you can still see hash rate is falling through the floorboards, and this is obviously not good. We know about the Bitcoin hash ribbons indicator, and often minor capitulations mark the final meltdown in terms of price action. So just like I recently said, I do believe we're in a very similar situation to the end of 2018, where once the hash ribbons indicator crossed bearish, we saw that final capitulation for Bitcoin down to $3,700. And at this moment in time, you can see the hash ribbons indicator is flipping extremely bearish, while the hash rate does rush to the downside. So since this has happened, of course, we're seeing big mining firms like Core Scientific become insolvent, but we're also seeing a lot of the little guys become insolvent, which is not good for the pool distribution and the centralization of the network. If we're looking at the historical distribution in the past year, you can see a lot of the big pools, like here you've got Foundry USA and Ant Pool, which collectively hold almost 50% of the entire network. In fact, I recently read this article where when this photo was captured yesterday on the 29th of December, the hash rate for the 29th of December in terms of its 3-day stats, over 50%, or yeah, literally just over 50% of the entire Bitcoin hash rate was centralized in these two mining companies, which is, of course, not good for decentralization. So if we do come over, and right now it's still at very elevated levels. Foundry USA holds 27.8% of the hash rate at this moment in time, and also Antpool holds 21.4%. If we come over to the weekly time frame, you can see these collectively are roughly about 50% of the network in the past 24 hours. It's become a little bit more decentralized with F2 Pool taking over some of the mines. But if we do scroll down and look at what's happening in the past year, you can see a lot of these big guys like Foundry and Antpool, their hash rate is really not dropping. They've been holding a very steady amount of the network, and in fact, Foundry is actually growing, Antpool is actually growing despite everything that's been happening in the network. And we've been talking about, of course, the profitability of mining is decreasing through the floorboards. So the only people who are really able to, maintain their mining operations are these huge big dogs with lots of assets behind them, and they can remain unprofitable for a long period of time due to the amount of money that they've accumulated over their mining history. However, like I just said, Foundry USA, Antpool, F2 Pool, you can see these pools are widening, meaning that their percent of the hash rate in the past year has been massively increasing. However, look at the others. If we look at the others, you can see, in the past year, they've been getting squished. You can see Poolin. Poolin now holds much less of the network than it did back over here. They previously held, about 7 or 8%, while others held about 18%. So some of your small dogs, just these two alone, held 18% of the hash rate. Now others hold, 2.5%, while Poolin holds about 1.25%. So less than 4% of the network. And of course, how has this affected, Foundry USA and Antpool? Well, they are just accumulating hash rate and making the network more centralized. So you can see a lot of these smaller ones. If we get rid of these, you can really see, they're losing a lot of their hash rate power, which of course is bad for the network. It increases the centralization, while some of these big dogs take a huge portion of the network away. Now, since our most recent talk about Core Scientific becoming insolvent, you can see as the hash rate started to plummet with this, the price is also breaking down about 3%. And we come over to the higher time frames, indicators, Bitcoin mining sell pressure, you can still see miners are absolutely selling at an extremely elevated rate. Since the 17th of October, this has increased by about 444%, which is definitely not good. Well, it's not good for the price action. We've previously talked about this over on Twitter, how, a lot of the time miners can sell during when price goes up, and they can sell when price goes down. But in general, fundamentally, miners selling, and then of course, you've got these big dogs sweeping up the hash rate. It's not very good for the price action. It's not good for the price action whatsoever. So, like I said, just wanted to give you a quick update on the hash rate and also the hash ribbons indicator. The network is becoming more centralized as the hash rate plummets through the floorboards, and of course, we know how these big exoduses in hash rate affect the market. Quite recently, well, I say recently, this was a year or so ago, May of 2021, we of course saw that China mining exodus where China banned Bitcoin mining, and we saw the hash rate absolutely fall through the floorboards. It literally got more than slashed in half, and this made price action go from 64, 65,000 all the way down to 29,000, and it wasn't until the hash rate started bouncing back up and taking a run to the upside when the network became more decentralized. A lot of smaller miners, mid-sized miners started buying mining rigs and started mining. Of course, when the hash rate goes down, it makes it more profitable to mine Bitcoin, because the higher the hash rate goes up, it means your mining equipment needs to be more sophisticated in order to mine that same amount of Bitcoin. It's all about your computing power. The higher the hash rate goes up, it just means there's more people mining for that same amount of Bitcoin. Whether the hash rate goes up or down, you're only going to be able to mine as a network collectively X amount of Bitcoin. And hash rate goes up, there's more competition to mine that. So of course, your mining equipment needs to be more sophisticated. But when the hash rate goes down, it means that you're able to mine more Bitcoin with the same technology that you've already got. So once again, hash rate going down, hash ribbons indicator is still in a major capitulation. I do believe we're going to see a final flush down in terms of price action, just like we saw in 2018. It's not looking good for the hash rate. It's not looking good for the decentralization of the network. And like we talked about, in the past year, a lot of these smaller dogs are getting squeezed out of the markets, and even some of the big ones, which are holding a huge amount of the hash rate, they're starting to turn off their rigs and become insolvent. Really not looking good. We do need to see the hash rate turn around, and we do need to see the hash ribbons indicator flip back bullish. We need to see miners stop selling, in my opinion, before we can expect a bottom to form for Bitcoin. So all I've got for you for this video, my friends. As always, if you do like the content, let me know down below by leaving a like and a comment. Share the videos with your friends if you want more content from me while I am away from the markets, more memes, news articles, economic data, on-chain metrics. Be sure to head over to my Twitter at 618_cowboy. So all I've got for you for this video. Cowboy out. Peace.